On this channel, I always focus on mainly on income investing ETFs. Those especially pay higher dividends. But now and then, I always trying to talk, to bring this type of other ETFs, especially for people who are younger or person who is an older, but he's investing either for their kids or for their grandkids, and they want to invest the money for long term. So I'm going to show you one of the best ETF you can pick today, right? Which is, apart from the S&P 500. And I'm going to show you why this ETF, this one here, Vanguard Total Stock Market ETF, which is VTI, what this fund is and why this is the best than S&P 500, and what, all the performance and dividend they pay so far. So if we look at the just quick overview right here, we can see here, first of all, is domestic stock. So that means it's only US companies, so it doesn't have any other companies. And of course, they're not S&P 500. They're not only 500 companies, but they're a bunch of them, more than 500 companies. And if we look at the category, is large blend, and expense ratio is very low. It's only 0.03 of your money. So if you invest 100,000, I mean, you only pay like a $300, a year. Is very low. If we look at the yield, is only 1.22. It's very low. Of course, this is a growth. It's not an income ETF. And market cap right now, or market price right now, is 270. And I can show you here on Yahoo Finance chart. Here we can see the 52-week range has ranged between 202 to 279. And on this chart, based on the price of today, it's 1.32% of dividend. And of course, they pay those quarterly. Look at net asset, net asset value, asset under management is 1.72 trillion. That's how much it is. It's like a lot of money. If we look at the P ratio is 25, so it's pretty much the same as S&P 500, or based on the market of today, because this is general market. If you look at the beta, which is volatility as compared to the S&P 500, is 1.01. So it's a pretty flat. It goes exactly like S&P 500, and inception date was incepted on 24th of May 2001. So it's been around for many, many, many years. We go back to Vanguard website, we can see here overview of this fund. Of course, it's a VTI, that's the ticker symbol right here, and it's domestic, a large blend, because it's blended technology companies, and of course there's growth and non-growth companies. Everything is included in this one. That's what they say here. It's a large and it's a blend. So they didn't only pick one sector, but a bunch of sectors in this fund. So product summary seeks to track the performance of the CRSP US Total Market Index, large, mid, and small cap, equally diversified across growth and value style, employs passively managed index sampling strategy. The fund remains fully invested, so they don't try to time the market. Of course, they do full at all time is invested on those companies that they are buying. A low expenses minimize net tracking error. So that's a pretty good. And then of course, fund manager is a Vanguard. If we look at the performance as of year to date, has returned about 14.68. Minimum investment, if you want to invest, of course, you can invest in even $1, right? For example, if you use a brokerage like Robinhood or any of these brokerage will allow you to buy fractional share, you can invest in this ETF just $1 minimum. So you can start with $1. There's no excuse to not invest in this ETF. Performance now, if we look at the performance, so within 10 years has returned about 12.31%. So that's pretty good, just like S&P 500, because this fund is very close to S&P 500. And there's also, if you look at my other comparison I made, I'll show you the performance between this fund and S&P 500. At one point, this fund would be more than S&P 500, would beat S&P 500. This depends on the market situation. And some other times, S&P 500, which only invests in 500 companies, does beat this fund. Expense ratio, compare this to other. So VTI is only 0.03, but average expense ratio of similar fund is 0.78. So that's a huge difference there. 0.3. So 100,000. This is only like this is only $300 versus 78. They were paying 780. So that's a difference. It's a huge difference when it comes to their expense ratio. Number of stock that they invest. Remember I told you it's a bunch of stocks. So they have a 3,673 stocks, right? And of course, right now, median market cap it's 178 billion. So they don't invest in the smaller companies. That's what it is. So because you can see here it's a large and it's blend. If we look at the earning growth rate is 17.7 and the P ratio is 25. We look at the return on equity is 24%. So we look at the other composition, weight exposure, how they expose this. So we look at the basic material is only 0.180. So the biggest one here is consumer discretionary, about 13.60. There's a consumer staple is 4. If we look at the healthcare, financial, and technology or industrial here, they're one of the biggest. But the biggest of all is technology. It has 33% of this ETF is technology, and of course, those technology will be the bigger companies like Nvidia, like Apple, Microsoft. That will take, because those stocks they have a higher market cap. Of course, they take the big chunk of this fund right here, and that's why you can see the yellow one right there. And the second one, if we look at this one, would be this one here, which is consumer discretionary. And then it followed by, I think, this one financial, and it followed by industrial, and then there's healthcare. Pretty diversified on all sectors of the economy, which of course there are 11 sectors in the economy, and they invest in all of them. But real estate, because it doesn't have as much growth, it's very low, and we can see utility also is very low because these are more for income. And of course this fund, it really main target is for growth, and it gives you that little bit of income, which is less than 2%. So if we look at the biggest holding they have right now, the one that takes the most big chunk is Apple at 6%. There's Microsoft, there's Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Eli Lilly. So the biggest the company it is, the bigger the weight it has in this ETF. Distribution, sadly for people who are like to get the money monthly, of course this one does not distribute monthly. It does distribute quarterly. And these are the dividend history they've paid. The last time they paid was on June 28th, 2024. They paid about 95 cents. And you can see here, of course, the payment are not consistent. We can see here there's a dividend on December 21st. They pay a little bit more, 1%. Usually, because of December is the end of the year, they usually pay high. Most funds, they do that. But if we look at the January, they pay 91, and in March they pay 91 cents, and then of course in June they pay a little bit higher. So the next distribution will be in October. Usually they announce in September, and then by beginning of October you're gonna receive next dividend, and the third one will be or the fourth one will be in December. So that's all, guys, for this ETF. I just wanted to show you other aspect of investing. So if you are an investor who want to just invest your money, you don't want an income today, you can invest in a fund like VTI, and this is one of the best fund. And the reason why is because it invests in broader US market rather than just S&P 500, those 500 companies. And whenever a recession comes, this fund will do great, and you can invest in this for long term, and you don't need to have a lot of money. As you can see here, the minimum investment, you can only put $1. Like if you are investing in Robinhood or Webull, most brokerage that allows you to do the fractional shares. So go invest today, guys. It's only $1. That's all I have today. So just make sure you, if you like this type of video, again, make sure you give me a like, smash that like button, and also don't forget to subscribe to this channel because I always give you update on investments. Bye bye.